I understand there's a delay here, so I'll keep my questions brief. What's the framework here, especially on a month where a lot of people are arguing that some investors are trying to talk the economy into a recession?
Yeah, my basic point in the op-ed and also in general is this, which is that the global economy today is facing 4 headwinds. And one of them is obviously deglobalization, which has to do with tariffs. But some of the bigger factors, which I think are underappreciated, have to do with population growth, depopulation as I call it, to do with debt levels being very high and also declining productivity. So my point is, in the wake of that, it is very difficult for the global economy to grow at the rates it did for much of the post-war era between 1950 and 2007, when the average growth rate of the global economy was above 4%. When your population growth rate, the working age population, is declining in 40 to 50 countries, it is very hard for the global economy to grow at the rate that it was when we had a population surge during the baby boom era.
Ruchir, it sounds like what you're outlining here is that the world's got much bigger economic problems than just a potential trade war between the U.S. and China. Do you feel like all of the tariff back and forth and all of this trade angst has become a catch-all that maybe is oversimplifying the problem here?
Yes, absolutely. Because I think that if you look at the slowdown in the global economy, that has been a consistent process that's been happening this decade. It's not something which began after Trump came to office or after the trade wars began. Sure, those things are accelerating some of the decline, but the slowdown in the global economy has been going on really for this entire decade. There is not a single economy in the world today that is growing at a pace of above 8%. And you have in China, in India, everywhere I go, talk of a global slowdown. And a lot of it has to do with these global factors, as I've said, which is that in China, for example, you have a shrinking working age population. In the wake of that, it's very difficult for the economy there to grow at the rates of 6% or so. So I think that in every single region, we need to bring down what is the definition of economic success, rather than just keep blaming this entire thing on trade wars.
And you do say the benchmark for rapid growth should now be 5 for EM. Developed economies more like 1 to 2. What is that going to do to central banks and their natural tendency to try to get growth a little bit faster than that?
Well, exactly what has happened over the last few years, which is that their policies, I think, have helped the financial markets and asset prices much more than they've helped the real economy. So the fact that you keep getting asset price inflation, the fact that you have stocks, especially in places like the US, which are trading at very elevated valuations, that's what really happens, which is that you have a lot of financial prices which benefit from these very low interest rates. But as far as the real economy is concerned, it's very hard for the real economy to just keep growing. As someone put it to me, that you can't print people. That if you're running out of people across the world, working age populations are declining, including in the United States, where the growth rates have slowed down of the population, it is very difficult to get the same kind of growth rates. So I think that we are suffering from an incredible amount of anchoring bias, which is that all because we grew very rapidly when the population growth rates were surging everywhere, we think we can achieve the same growth rates on the back of stimulus. And that is where I have a fundamental disagreement with the policy prescription of many people, which is that every time the economy slows down, we want to head towards implementing even more stimulus. I think that's counterproductive.